Good morning, guys. I hope you can hear me now. I've just realised I didn't have my headset on. Today is the 4th of June, Friday the 4th of June, and it's non-farm payroll day. And I'm on my own today. Joe isn't with me, but I'm going to soldier on, go through what we're expecting today, go through the chart, and a little insight into what we're expecting later, and maybe provide a gun to the head trade idea if you're lucky. So let's start with what really went on yesterday. So market highlights from yesterday. The US ADP and employment data was stronger than expected, with the ISM non-manufacturing release also close to record highs. US bond yields moved higher following the data. Overall risk appetite was slightly more fragile amid medium-term Fed tapering speculation. The Wall Street equities dipped sharply before recovering on the latest Biden tax proposals. Asian equity markets overall were mixed and selling on rallies. The dollar posted sharp gains after the data, with short covering also in evidence ahead of Friday's job data. Euro dollar dipped sharply to the lows, just above 121. Sterling dollar was blocked at 142, retreated to below 141. That says 121 on the sheet. That's wrong, amid the US advance. Commodity currencies also declined sharply as the US dollar recovered. Oil prices eventually closed slightly lower, despite an EIA inventory draw, and precious metals dipped sharply as the US dollar recovered. We'll go into the technicals of that. That was quite interesting. Cryptocurrencies dipped after another round of comments from Elon. So that's pretty much what we've seen yesterday. Now, obviously, what we're really interested in, where we think things are going today, and we're going to go through and run through the charts. We're going to start by going through the FX charts, and then we'll jump into the other charts after. So what's going on in euro dollar? Weekly chart, I'll show you my weekly chart, my take on it, and potentially the last few days maybe marry up with my thoughts previously. We've had an impulsive five-wave move higher. We've hit this really decent resistance level, and both laterally and the downward trending resistance. We've seen shooting star, doji candle, and a bearish, well, today is forming a bearish engulfing, nearly a bearish outside candle on the well, this week rather than today. This is the daily chart, and we can see we've failed to break and really sort of hold above this resistance we had previously back on the 25th of Feb at 122.43. We tested it 3 times and failed. You see that volume dropping off, and this has led to a sell-off, and we're currently seeing that sell-off extend into today. Levels to watch, really, we look at the 4-hour chart for levels to watch on the euro dollar. Now that we've broken that support, the support coming in at 120.50, so about 70 points lower, and resistance really, price action, previous support now turns into resistance, and that's coming in at 121.60. So selling rally is not a bad idea in there today. On the cable side of things, we've had this quite prolonged move higher, and again we've got to the 50% fib retracement level, which comes in at 142.88, and we've rejected just below there on the weekly chart, again forming a bearish outside candle. So a little bit of a warning sign maybe that the dollar is making a bit of a comeback. Daily chart on cable, we can see the negative price actions and the 142.41 previous swing high again, the 24th of February. That was my birthday. Happy birthday, Steve. And we've retested that level 3 times and failed, and we've got the negative price action kicking in today. Let's go to the 4-hour chart to look at the real levels of support that we'll be testing today. We've just retested the 141 level. If we do get a sustained break below there, really looking to the 140 level as the next level of support, and that's backed up by the this 20th of April high. So, swing high, previous resistance, turn to support. Let's get these lines looking a little bit neater with the support. So I'm doing all this analysis live. On the resistance side of things, we'll have a potential resistance coming in at 141.85 and obviously 142. So that's where the resistance is today on a short-term chart. Looking at Aussie dollar, also very commodity-based currency pair. And again, we're seeing the same sort of formation. This strength in dollar is leading to reversal formations, potentially picking up. Straight away here, I see the head and shoulders, potential head and shoulders formation. That's got a little bit of a way to go before we test the neckline. It's not formed until we break a neckline. So we've got support below coming in at 75.32, and this is backed up by this 75.63 as well. So plenty of support down below. If we look on the daily chart, at a very sort of clean evening doji star formation. It would look better if it was at the high of the rally. It's not. It's down midway through, but it did rally off this support level at 76.75 and then reverse strongly from here. So this previous support turns into resistance at 76.75. Next level to watch 75.30 and just above there. 4-hour chart. Actually looking a little bit of a bearish flag, so maybe an extension further coming sooner than we think. So let's look at the dollar index and see what has happened in here to cause all this reversal in the bullish pairs. We've got a hanging man candle, sorry, an inverted hammer candle. That's typically it can be bullish. We've got a bullish hammer, obviously, as the name suggests, bullish, and that rejected, that sort of like saw a reaction from the 89.65 low. So that was backed up by some horizontal support. We made another low the week after, but it posted a doji candle, so a real sign of indecision. And hey ho, this week is looking really healthy indeed. So trading around 90.55 on the dollar basket, and for me, this looks like the dollar could potentially make a bit of a comeback into next week. This will be a really decent bullish formation. Can it hold on to those gains? We shall see. Let's move on to commodities. Let's look at crude oil. Now, crude oil, as we've said, this is a weekly chart. We are in an impulsive 5-wave move higher. We get the first wave up, second wave correction, third wave up, fourth wave correction, and the fifth wave. Wave 3 is normally not the shortest. So as wave 1 and wave 3 are very similar in size, we expect wave 5, the final wave, to be less than wave 1 and 3. So we're looking at the real level of resistance for me, 76.80, but we have got other levels, other resistance levels. We've got the $70 psychological level that's to be tested, and I think we have, let's see if we can marry up some other fib retracement levels, really from this swing high here. I have to go all the way back there. Yeah, I mean, we've broken even above the I won't even bother putting any more in. We have broken above the sort of like the really important 78.6 fib. That was at 62.51, and we're marching on. So really, for me, the only real levels we can sort of like say this is going to be resistance is this level here, this these previous highs, 72.84, 73.64, they're coming in at. So at the moment, despite yesterday's doji candle, as we see here, we drill into it. That's a doji. That's indecision after this nice, really impulsive move higher. We're seeing the volumes drop off. So again, be aware of that. There is potential for a reversal to correct the overbought indicator, but 66.50 looks like a nice supportive level, which was previous high on 3 occasions. Now, for me, gold, hey ho, we talked about this, and we've talked about it for a little while now. We've got this downward bearish channel. It's sort of like, I believe it's posting a bit of a bullish flag, so you get this corrective move lower. However, we were seeing signs that really, obviously, when we looked to sort of, well, like we were testing this top of this channel, we saw signs this week that we were getting a rejection on it, and this has played out, and this is really, really ominous for gold. Obviously, mainly due to the stronger dollar, but this, for me, indicates that we are going to get a little bit more of a bearish price action next week. 1871 trading at the moment. Again, we'll look at the daily chart. We had the supportive levels, previous resistance 1875. We broke through it, that became support. We've now broke down below it, and so now turns back into resistance again. So this decent sort of supportive structure has been broken, and this looks negative. Next real support we got, I think, coming in is between 1845 and 1848. The range even on today, we've been down at 1855 and back up to 1875. So decent volatility in gold. On a daily chart, that's forming a bit of a bullish hammer. So again, it's not, there's no real sort of like, I mean, yesterday's candle for me is the dominating one, which has turned the weekly chart bearish. That's a bearish outside candle, so I expect a negative price action, which we've seen this morning, and really looking into selling rallies in that 1875, 1890 again would be for me the pivot level. So a break back above 1890, the downside bets off. Until then, worth sort of selling in front of that and having a stop just above. Now, where are we going to go? Let's go to indices. Obviously, non-farm payroll today, so obviously be aware we expect some really decent volatility. It was weekly chart. As a reminder, we've got a hanging man candle on the FTSE. That's looking pretty good. Obviously, with dollar improving, lends a little bit of a boost to the FTSE. There's a lot of dollar denominated stocks in the FTSE 100, and so, however, price action yesterday, bit of a bearish engulfing, maybe a bearish outside candle, and a hanging man, so a little bit negative, and that's had a bit of follow through today. Let's talk about levels to watch. Really, I shouldn't really just gloss over that. I'm sure there's a lot out there who want to know where the FTSE levels to watch are. So resistance really 71.23. We're trading at around 70.60, and we can see this consolidation that we've seen over the last 24 hours, slightly more, and we got the bearish momentum on the MACD. So still looking negative, still potential for some downside. We've got some upward trending support coming in at 70.11. That look, I expect a bit of volatility, but again, it feels a bit sidewaysy. And if anything, this is the one from an indice point of view, which is going to be difficult to nail with the dollar strength, and indices maybe a little bit under pressure, but then getting revived yesterday from the Biden tax news. On the DAX, again, we were talking about the hanging man candles. We're in expanding wedge formation in DAX. Very, very difficult to trade these indices or any market which is in an expanding wedge. But very, very positive week overall for the DAX. We're trading up at all-time highs, close to it, 15,660. So looking pretty punchy up here. Can't help feeling we're in a bubble. I know I talk about it a lot, but well, we are. Both on an indice point of view, but maybe more so on a crypto point of view, which I'll go through in a moment. Yeah, but although these are green candles, they're not really the most positive candles in the world. Again, hanging man candle, shooting star candle, indecision, dojis, another hanging man candle forming today. But as I say, non-farm payroll could put paid to all of that and really throw the cat amongst the pigeons. ADP came out yesterday very strong, very punchy, and we could get a bit of the same in non-farm payroll today. On the Dow chart, we're still off the highs in Dow, and this bit of consolidation for me feels a bit like ABC correction. So I think we've got another leg lower. Same in Nasdaq, the tech sector now starting to struggle a bit. So obviously we see the tech sector ended up down yesterday, and S&P's hanging man candle on the daily. So Aussie 200 doesn't care because it's got the loads of commodities, commodity-based stocks in it, and that continues higher and looking pretty cool at the moment. China 50 was strong this morning, but it's reversed very sharply. So again, that's trading around the 17, well, round about the 18,000 level. So as I said yesterday, I mean, this looks like a bit of a bullish flag forming, but as I said yesterday, the 18,000 level for me is a pivot level. That's been a previous support and reaction level and a previous resistance. And so either side of that, I think you go with the flow above and go with the flow below. Hang Seng picked up on this head and shoulders formation a long while ago, but this has really extended. It's a complex head and shoulders formation if it does play out. And the right shoulder is all the way over here. So for me, it's we've got this evening star in doji formation formed, so negative on that. So indices looking a little bit weak overall, I would say, apart from FTSE maybe. And on the Nikkei again, we've got this even got a downward trending resistance coming in there. But plenty of sort of like candles which are showing indecision and rejection of the move higher. So again, on the bit of the back foot. So cryptos, let's have a look at Bitcoin. Now, what can you tell me, Bitcoin? Bitcoin was obviously, I think, leading the way. And I talked about this triangle formation quite a lot recently. And one of the things I did say is I expected it to be a false break, first of all, before the actual move comes in. And obviously, I know you guys, or a lot of people that watch, like to sort of be quite bullish on cryptos. Yeah, a little bit more of a hope thing in my eyes. 4-hour chart looks pretty bearish. We've seen a bearish outside candle followed by an extension lower, and we're now looking to test the downside of the triangle formation, which was broken and violated over the last sort of 48 hours. So for me, looking at the short-term chart, you can see my gun to the head trade failed yesterday. The stop was way too tight, but it has sort of like extended lower. It's back below the hourly Ichimoku cloud, negative again. Levels to watch below. Support should come in around about the 35,675 level. And really, I would say resistance coming in now around here, around the 37,200. So yeah, negative on that, and we'll see how things play out. So that was the cryptos. Day ahead, what are we seeing in the day ahead? So we got 9:30, we've got UK construction PMI, not long away, forecast to rise 62.3. 1:30 we have US non-farm payrolls. I'm sure everyone's looking forward to that. 621,000 jobs expected to have been created. Unemployment rate to fall to 5.9%. Wow. So pretty sort of like good news if that plays out for the US economy. But that's what the market's expecting. Let's wait and see. So I'm going to dive into a gun to head challenge today. Joe will finish in on the results yesterday. As you see from my trade idea, I was stopped out. Hopefully Joe did a bit better than me. And after analysing all those charts, what to do. Really, for me, I'm going to sort of like stick to my little bit of a plan, maybe that to fade these indices. I know it's very risky, especially non-farm payroll day, but let's just get on it. I can have a stop above 15,685, getting short at 15,648. My stop will be at 15,718. What does that give me? 700. And so that tells me I want to be looking for a 4-to-1 risk reward. I want to be looking to a move down to 15,368. That's my sort of bearish view on that. From the bullish side of things, I'm sure 15,473 will be difficult to break down, but I'm going for a bit of a punchy risk reward trade today, and as I normally do. So I wouldn't hang your hat on it, whatever. So hopefully that's we've done the day ahead. Everything looking cool over there. Let's wish you a happy and careful trading day, non-farm Friday, and good luck for the weekend. And we'll see you Monday. And Joe will be here, and hopefully we'll be going a little bit smoother. Thanks very much, guys.